Due to US President Trump's tariffs, global supply chains are feeling the strain. Roland Lim is back with us to talk to the CEO of DHL, who has his pulse on the flows of goods around the world. Over to you, Roland.
Thanks, Paul. Logistics giant DHL Group has announced Q4 results, revealing that operating profit is up and that the company is in good hands. Tobias Meyer, CEO of DHL, joins us live from Bonn to talk more about the company's results and the outlook this year, given especially the uncertainties in global trade because of tariffs initiated by the US. Mr. Meyer, good to have you with us on the show. It was a stellar set of results for 2024. Are you just as bullish for the outlook this year?
Well, thanks for having me. And 2024 was an interesting year. It actually started relatively soft. We shouldn't forget that. But we had a positive momentum during the year, returning to revenue growth in Q3 and having a really strong finish with Q4. And I'm very proud to say that we particularly had a very good peak season, delivering great quality also to our customers, which obviously is extremely important to us. We live in a volatile world, so we have two things mainly to do to capture the opportunities that we have around the globe, growth markets, also in Southeast Asia, which is a region that we're generally very excited about. But we also need to watch efficiency. We want to deploy technology that is available to us to drive labor efficiency, but also to continue to improve the quality of our service. That's the program we set out with our Strategy 2030.
Given the current global trade uncertainties, especially with the evolving relationship between the US and China, how do you foresee these geopolitical dynamics actually affecting demand patterns when it comes to DHL's services?
So, firstly, we have a great advantage in our footprint. We are really present in many markets that are not so affected by this turmoil. We are very strong in Asia. Nobody knows Asia as we do, is a claim that we often used. But also in the Middle East and Africa, these are really our strongholds. Now, the trade with the US is obviously important for us as well. It's a quarter roughly of global trade that goes in or out of the US. So it does matter, but we still have 3/4 also strong intra-Asian trade that we aim to participate in. And that's something that we really focus on, that we have intensive discussions with our customers, how we can enhance our services in those areas that are growing.
And speaking of Asia, you've also been relocating Chinese staff to better serve Chinese customers abroad. That's implementing a China Plus One diversification strategy. But now that Trump plans to match tariff for tariff in any particular country, are your clients changing tack?
Well, we have seen the shift of manufacturing, especially, you know that, Vietnam playing a bigger role in electronics, for instance. And we do see that Chinese companies internationalize as European companies have 50, 60 years ago. And that's something that I think generally is positive. And we want to be part of that. We want to help those customers internationalize their distribution footprint, but also their manufacturing footprint, to set up new plants in Europe, for instance, when it comes to electric vehicles. So that's why we really focus on those customers and obviously try to provide a good service also by having local language capabilities, as we had in the past for other trade lanes out of Japan, out of Europe especially.
The ripple effects of increased protectionism could very well reduce international trade. What's your base case prediction for freight rates into 2025 this year?
Very difficult to say, Roland. First of all, I think it's regrettable to have hurdles to trade. Trade has not only helped nations develop, it also helps us all to participate in technological progress. Think about the vaccines that we were allowed to distribute across the planet. Think about other advances in medical devices, for instance. And not all nations, not all countries will be able to build such devices, so they need to be traded. And it's regrettable that hurdles are put up. It's not to the benefit of the people. But we need to cope with that. And for us, it's a bit of a dual message. On the one hand side, yes, volume goes down. China-US trade is such an example that hasn't grown in the last 5 years, but rather shrunk. But for us, it often means more work. If you think about the abolishment of the de minimis, for instance, that means many, many millions of more customs filings, and that's activity that we obviously support our customers with. As it relates to freight rates, I think it will depend a lot on China outbound e-commerce that has a notable impact on the global air freight market. A lot of particularly full freighter capacity is tied up in that type of trade. And as it relates to ocean freight, we have still the Red Sea issue. It's very clear if the Red Sea would reopen, we would obviously save quite a bit of traveling time on the Asia-Europe loops, and that would free up additional capacity with impact on rates. So I think these are the main two factors that we are watching. Hard to predict how it will play out.
Is capacity still tight, though, when it comes to the slots on vessels leaving China? I mean, given the situation in the Red Sea.
Well, I think it is tight, especially also due to landside infrastructure. That's an increasing issue again, not only in China, more so in European markets and in North America. So that's something we need to keep in mind. This system has different type of bottlenecks. It's not only the capacity of the vessels itself, it's the availability of boxes, it's the port capacity, it's the hinterland capacity to get those boxes out and in of the ports. So that's what the chain consists of, and we do expect further bottlenecks arising as trade evolves.
Is it less bumpy for air cargo? What's the outlook there?
Well, it very much depends, as I mentioned, on how China e-commerce will be handled. We are a strong believer that the drive, the need, the wish of consumers to order online, that is very much intact. So it's not a question of the last mile that the package is dropped at the door, but it is a question where that package is packed and how it is transported. Is it packed in China originally, or will China merchants also set up shop in the US to do fulfillment activity? That will have a severe impact on air freight capacity becoming available. So we have to see how that plays out. It very much hinges on the de minimis question in the US. If that would go away, I think you would see a significant shift to more localized inventory.
Thank you, Tobias. That was Tobias Meyer, CEO of DHL, speaking to us on his analysis of the international logistics market.